So, welcome to this session with the prolific traders. We are actually about to get sucked into the juice of it. And before we start, just make sure you actually like the video, subscribe, and trust me, we are actually sharing big knowledge here now. So remember, we are now on the topic under technical analysis. The first topic we'll be covering is basic market structure. Okay, so what are actually these market structures? So these market structures are actually highs and lows in the market. And before we actually go deep into this, I would just like to tell you guys this is actually the first thing I actually look when I go into the market when I'm about to analyze, right? And this is what gives me the direction. This just understanding market structure alone is going to give you the direction in the market. It's going to help you to avoid a lot of losses. Why? Because you know you're trading with the trend, and there's a saying: the trend is your friend. Okay, and you need to trade with the trend. You trade against it, it's going to hurt you. So firstly, we are going to start this way: the bullish market structure. So remember, market structures are just actually highs and lows in the market. And if you can look carefully, you see how let's assume this is price. So you see price is moving up, and as it's going up, at some point it made a high, started going down. You see, right? And now price started tracing what? Up back. Okay, let me use this to make this, and you can see price is going up, and at some point it starts to retrace back, right? And once price starts to retrace, remember, as price start going back, this is a high in the market. So remember, structures actually what? Highs are low in the market. And as soon as price break this structure, you see this boss here. This boss here stands for break of structure. Okay, so once price close above this, once price break this structure, that is where we look behind. We look at the lowest point, right? The lowest point between the high and the break of structure. We look at the lowest point that price has reached, right? And we consider it our higher low, right? And let me take that again. So as you can see, price is coming up and price start going down, and at some point it start retracing back. And as soon as price break above this previous high, this is called a break of structure, right? And now it has come out. Now you start seeing price retracing. Price has break this structure and it has made a higher high. Okay, and now in an uptrend is made up of what? Higher highs and higher lows, higher highs and higher lows. So the reason this is called higher high is because this high here is higher than the previous high, and this high here, this low here, is higher than the previous low. So these are called higher lows. Okay, don't bother. This video will be here, so in case you have any difficulties, you can watch it as multiple times, as much as you want. So remember, the market start going up immediately. The market does what now? The market make a new high. Now this are what is our higher low, and now you start seeing price retracing. As soon as price start going back up, you see price trade above here. As soon as price trade above, they make what? A break of structure. You can see price will make a break of structure, which is also known as BOS, break of structure. Now we can look at the lowest point, and the lowest point that price reached before here, before the break of structure, and consider it as our higher low. So this is another case. This is another case where the market could come up like this and break the structure fine. Then as soon as it's up here, it start retracing now, and as soon as it start coming up, some traders are just going to consider this as a higher low. No, this is not yet a higher low, because at some time price can definitely just do what? Price can definitely trade by a little bit before now it caused a break of structure. So in this scenario now, once you see price have break the structure now, this will no longer be the higher low. This will be the higher low. Why? Because it's the lowest point that causes what? The break of structure. This is your swing structure. Okay, so these are actually swing structures, and that is that. Let me get it again. So in a bearish scenario, this is in a bullish scenario, right? This is also known as an uptrend, simply known as an uptrend, bullish market structure. The market is made up of higher highs, higher lows, higher highs, and remember the higher low is confirmed only when the break of structure happen, and higher low So in market, we expect price to continue, and as soon as what happen, price break structure, we consider this one again as our higher low. Okay, as our higher low. So that is that. And in a bearish scenario, right, in the bearish scenario is simply the same but just the opposite. So it's a downtrend, bearish market structure. Now a bearish market structure is made up of what? You see price is going down, made up of lower lows and lower highs. It made a low and it start to retrace up, and at some point price just start coming down back. And remember, this is a structure here because this is a low. Remember, market structure is highs and lows in the market. As soon as price break this structure, now we look at the highest point. We look at the highest point that causes the break of structure. Then that is where we consider as our lower high. So at some point, some scenarios may be as soon as price start coming down, some traders will label this as the lower high, which is totally wrong because price has not given yet the break of structure. Because only the break of structure confirm the lower high, and only the break of structure confirm the higher low in a bullish market. Okay, so at some point price can be moving and you see price go up back, before pushing down and causing what? The break of structure. Now this will not be considered as what? As a lower high. This will be considered as the lower high. I hope that is clear to understand. And now in an uptrend, this higher highs and higher lows, is what made up what is what makes up an uptrend. Okay, this is what make up an uptrend or a bullish market. Meaning when a market is going in an uptrend, is making what? Higher highs and higher low. Okay, and in a downtrend, it's simply the opposite. In the downtrend, the market is making what? Lower lows and lower highs, lower lows and lower highs, and lower lows. Remember, this is confirmed as a lower high only when market does what? Market break structure. Okay, so all these lower lows and lower highs makes up what? A downtrend. So in the real market, remember, in the real market, it's going to look a little bit complex. That's why I want to use this as an example. This is the reality. In a real market, it's going to look a little bit complex. So remember, these are some few things you need to actually get in mind. Swing high, these are high points that causes a swing low. Okay, so when we talk about a swing high, these are actually high points. This is a swing high. Okay, because this is a point swing high, a point that causes a low. While a swing low, the lowest point that causes a swing is a swing high. So this is a low here that causes what? A high. Okay, this is a low that causes a high. And that is that. Okay, and remember, after a break of structure, expect a pullback. So we are going to them. I'm going to explain this right away. So immediately we are trading. This is the scenario we have, right? This is how we trade. Okay, just look at it as a strategy. Okay, so what our strategy is, we are trying to do what? We are trying to buy from in an uptrend. We are trying to buy from higher lows to what? Targeting what? The highs. Right, and immediately we take our profit here. The next expectation is we're expecting price to do what? To retrace. We don't actually know when it's going to retrace, okay, because this is what losing traders tend to do. Okay, when they see this break, what they consider is a breakout, and they try to do what? They try to buy. And what they always mostly experience is they will make a little bit of money and price will drop and take them out, or immediately that you see price will just start dropping and it's going to take them out, or they will make little money with high risks. Right, why? Because the stop loss will be very well down, which that is what, as a trader, we don't want. We minimize risks, we maximize our profit. Don't bother as we go forward. We are going to discuss about that risk on other risk management. So here, remember, after a break of structure, our expectation is price will retrace. So that's why when we start seeing price retracing, we don't doubt, okay, because we know price needs to retrace, and at some point we'll try to buy at the lower high, hoping to target up here. Okay, I hope this might sound complicating, but for now, keep it at the basic. Remember, this is how an uptrend market structure is formed, and this is how a downtrend market structure is formed: lower lows and lower highs. So in the reality market, These are, so remember, these are swing structures, okay? And everything we are doing here is just based on one time frame. Everything we're doing here is based on one time frame. So these are swing structures, higher highs, higher lows, okay? And now this is exactly what we are going to go. So this is we are going to go through now. This is like based on the real market condition now, because remember the market is more complex, okay? And now in this case, just as we're saying, imagine price coming, this is our swing structure, price coming up, and at some point it finds a high, and now it start coming down, then later on start turning up back, and now it does what? It did a break of structure, okay? So this is our low, this is our this is our low here, and and we know in an uptrend, right? This an ideology I want you to keep in the back of your mind, right? In an uptrend, we don't expect price to trade below a higher low, okay? What you expect is price to continue doing what? Making higher highs, higher lows. Sorry, higher low is only confirmed after the break of structure, okay? Now immediately after the break of structure, we look at the lowest point. Now, because in such cases in the live market, people are so catch up by this internal structure here. Don't bother. As we move forward, you are going to understand by this here, because they'll be like, the market is, let me just clear off this, because some people tend to see this and they'll be confused, like the market is going down, it's making lower lows, lower highs, lower lows, lower highs, lower lows. So we are trying to catch this lower high here and target the lower low. No, that is because they are not focused on the swing structure, okay? The swing structure is making what? Higher highs, higher lows, higher highs, right? As soon as I see price retracing, as soon as I start seeing price retracing, okay, this is your low, this is your swing range, okay? This is your swing range. Your swing range is your higher low and your higher high. This is an uptrend, okay? And you expect price to do whatever it wants, and as soon as it break up here, you look at the lowest point and you consider it as a higher low. Now, because some people will be confused, is this my higher low? Like some people will be confused, will this be the higher low, will this be the higher low, or will this be the higher low? On the swing structure will always be the lowest point, okay? The lowest point that causes the break of structure. Remember, this is the break of structure here, and this is the high. From the high to the break of structure, the lowest point is considered the higher low, because in some cases, let's say the market was coming down and then later come down like this before going up, this will not be considered a higher low, this will be considered a higher low. Why? Because it's the lowest point that causes the break of structure. I hope that is clear. And like I said, this is a real life scenario. You see the market is going to be a little bit complex, but no matter what is going on, once you are in your trading range, no matter what is going on inside this trading range, it does not matter, because it's still bullish once price has not break below the higher low. Don't bother. As we move forward, we are going to see other scenarios, but for now I just want you to keep it very, very simple. And here is a bearish example. So you see price moving, making a lower low, lower high, now lower low immediately after a break of structure. Then so this is our lower high, this is our trading range. As soon as I start seeing price rejecting, this is our low, and now price can do whatsoever it wants, you can see. But as soon as it break here, we'll look behind, we'll look at where is the highest point that causes the break of structure, okay? And this is it. So this considered as our lower high. But in some cases, let's say the market would have come like this and then go up a little bit more before coming down. This would have been considered as our lower high, okay? This here would have considered as our lower high, because that's the highest point, and this and not this. So that's why I always say you wait for the confirmation. What confirms the lower high or what confirms the higher low is the break of structure. right? That's a break of structure. So I hope this is a little bit clear on you or for you guys. If you don't get it, please watch the video again. You watch the video multiple times, and that is that for basic market structure. Okay, so this will still be under market structure. These are actually strong and weak highs and lows in the market. This is a very important concept. A lot of people, they don't really look at it, to actually value it, but I tend to see it as such a powerful concept that it is going to change your view about market structure and how you actually look at the structures. Okay, so what are strong lows? Okay, so you can see these lines, these with these thick lines that draw behind my structures, these are called strong, and these ones are called weak. So what makes a strong lows? Strong lows are lows that causes highs. Okay, so consider this to be like a low's job is to cause a high, is to make a high, and a high job is to make a low. Okay, so let me explain this more in detail. So remember, let's go through this. A strong lows that causes highs, right? That means those are low that causes highs, and a strong high, yeah, it's a high that causes a low. So remember, the job of a low, the job of a low or a high is to, the job of a low is to create a high, and the job of a high is to create a low. So when a high has successfully made a low, that is what is considered as a strong low. And when a low has successfully created a high, that is what is considered as a strong low. Okay, so let's start here. For example, so you can see price. So you can see here, this is a strong low. It's considered a strong low. Why? Because it was able to do what? To break structure and what? And create a high, right? So this is considered a strong low. So this is considered a strong low because this consider this, these are actually where big money actually step in the market. Because remember, I told you structures in the market actually highs and low, and in order for a structure to be broken in the market, it actually requires a lot of money, you see, right, to actually break structure. So when you see market makers, when you see a low break structure, it simply means they actually big market makers, others here, right? And often they won't want the market, they won't want the market to trade down to their entry for them to lose their profit, or the market to trade down below their entry, and so they can be in losses. So what will always happen, mostly happen, is once you see the buy here and the others as the are here, price usually come back, and price will not trade below where the others are. So you see price will continue, and once price continue and break another structure, this will be categorized now as what? As a weak high. Why? Because the high was not able to make a low. And same here, let's say, let me just take this away, let me just take this again, I believe, let me just take it again, it's going to be more clearer. So remember, this is a bullish market structure, right? And remember, these are actually strong highs, strong lows, and these are weak highs. These are considered strong lows. The reason is being that they were able to do it, to make a break of structure. Okay, and in a downtrend, these are considered strong highs. Why? Remember, why? Because it was able to do it, to break structure. So remember, right? These are considered what? Strong highs, because they're able to break structure. These are considered strong lows because they're able to break structure. And these are considered weak highs. Why? Because we're not able to break structure. You see, right? Because as soon as price started tracing, it did not break structure. It came back up and break the structure up. So this now is what? A strong low. Why? Because we're able to do what? To break structure. I don't know if you are getting it. So now our expectation is price cannot trade below here. Why? Because big money they have stepped in and their orders are here. So you will be like, since their limits are here, they will not definitely want the market to do what? To trade down. You see, right? Why? To trade down so they will lose their profit, or for them to actually take losses. No. They will want to do what? They want to buy more as soon as price start coming in. As soon as price start retracing, they want to buy more. And when they buy more, that's how you see it does what? Another break of structure. And this is what? This is where we don't expect price to trade below, because it's considered what? Protected. So another way for you to look at it is, you can call them protected highs and lows. Okay, why? Because they are protected by the smart money orders. Okay, by the big money orders that actually in the market at that particular price. So let me take it again. I hope it's going to make sense this time. So you can see here, you see price start coming and price made a high, right? And unfortunately price reached here and it start going all back. And as soon as price did what? It did this break of structure. Now we knew that what? Smart money has come in, because it actually requires a ton amount of money to actually break structure. So smart money, they have their orders here, and since they have the orders here and they're able to break structure, we expect that price will not trade below here. So this is our trading range. So this, because why? This low is protected. Okay, this low is what? Is protected, and this is considered weak because it was not able to do what? To break the structure on the downside. The structure, it was this low that was able to break structure and do what? And create a new high. Remember, the job of a low is to create a high. So it's considered what? A strong or a protected low. So as soon as you see price start retracing, you are not surprised, because what? After a break of structure, we are expecting retracement. So you just draw your range. So this will now be what? A swing range, right? And you know, this is my swing trading range. So I'm expecting price to do whatsoever I want, but I don't expect price to trade below here. This is just the ideology. This is our expectation. This is what guides us. Okay. So you know, price can do whatsoever I want here, but you don't expect it to trade below here. And as soon as you break up here, you know what? You know that what? This is now what? The protected low. The lowest point here will become what? The protected low. Become the next protected low. I hope you are getting it. Let me just clear this away. So as soon as what? You see price moving, as soon as price break the structure, we know this is a protected low, and big money have the orders here, so they don't want price to trade below here. So we don't expect price to trade below. So as soon as we start seeing the retracement, we know this is our swing trading range. And as soon as price come what? Price break again up here. What do we know? We know this is what? This is our protected low, right? And why is it protected? Because it was able to do what? To break structure. So we don't expect price to trade below. And as soon as price start retracing, we know this is now a new swing trading range. And as soon as price come again, break up here, we know this is our protected. And if price is coming, and as soon as price start retracing, we know this is our swing trading range, and we know it's what? It's still a bullish trading range, right? And price is just going to go up like that. We know this is protected after the break of structure, or we can see. And we know prices cannot trade below here. Price can do whatsoever it wants. As soon as we start retracing, we know price can do whatsoever it wants, but it's going to go up. So that is what that is another concept on how you can look at an uptrend. It's made up of strong lows and weak highs. Okay, so you can see it's made up of weak highs and strong lows, and the goal of our strategy, right? Let me just show you again. Sorry, my bad. So the goal, remember, our goal is to catch higher lows and lower highs. Continuation. So remember, our goal is to trade from what? From the strong to the weak and target the weak. Okay. So remember, our goal is to trade from the strong and target the weak. So remember, this is a strong. Our goal is once price. Our goal is once price start coming down, as soon as we have this break, that we know that okay, this is a protected level. I will not expect price to trade below. And as soon as we start seeing price coming down, we now know this is our trading range. So our whole narrative is, and our strategy is based on, we are trying to catch now what, this higher low when it's here, and ride it up and target where the weak lows. We are trading off the strong, but we are trading from the strong, targeting where the weak. You see, right? And as soon as price start retracing again, we know this is a strong, and we know we don't expect price to trade below here. So as soon as price start retracing, we know this is our trading range, and we're trying to trade, to buy, go long, right? And target where? Target the weak highs. And that is how it continues, and that's how it continues. Okay, that's what we want to see in an uptrend. So in a scenario, in this scenario of a downtrend, it's not much of a difference. It's not much of a difference, as you can see. So the market is going down, and at some point you see it start going up, and as soon as it break this structure, now we know what, this is strong. This is a strong high, because the high was able to do what, to create a low. This is strong, so definitely it's protected, and we don't expect price to trade below, right? And as soon as price start retracing, we know this is our range. So we know price can do whatsoever it wants. It can come up here, and as soon as it break, we know everything is bearish, right? And price can do whatsoever it wants, and our target is what, we are trying to catch this strong lower highs and target the weaks. Remember, we are trying to trade from the strong to the weak. Okay, that is the goal. That is our goal, because that is actually the continuation. So we are waiting when price is coming back. We want to catch this there, the sells there, and target where, the weaks. Why? Because we know and we expect that price should not trade above here, because we have big money. You see, right? It was able to do what, to break structure. For the market to break structure actually require a lot of money. So when you see price break structure, it just indicates that it's big. They're actually big money that has stepped in. You understand, right? Because remember, the foreign exchange market is not just traded by retail traders. Retail traders actually cover just less than 20% of the foreign exchange market. More trades in the foreign exchange market is actually made by huge firms, big companies, big banks, and so on. Okay, so when you see the market being able to break structure, you know that definitely there's big money here, and we don't expect price to trade above that. You see, right? Why? Because able to break structure. This is just the expectation. There's going to be a scenario where it's going to trade above, because we're in the foreign exchange market, but we are going to treat that, so you'll be able to select that, and you know when and where and how to trade. Okay, but definitely for now, just keep it simple as we move forward. So you can see, as soon as, remember, our goal is to trade, sell here and target the weeks. Okay, and as soon as price break structure, we know this is a protected level, and waiting for what, that rejection. As soon as the rejection start coming, we wait, and we try to do what, we try to sell, and we target what, the weeks. Try to sell the strong and target the weeks. In a downtrend, in an uptrend, try to buy the strong and target the weeks. Okay, so that is that. So that is that on the theory based on strong highs and weak lows. So I would just like to show you guys this also. I would just like to give you guys a small hint on how it will look like on the real market with more explanation. Now it's going to make more sense. So look at this. Assuming price is coming up, and at some point you just start retracing, and remember, after what, this break of structure, now we know what, big money has stepped in. Okay, and this big money was able to do what, break structure, meaning they are doing what, they are buying, right? And they are buying. So this is what, this is a protected or a strong week. Remember, this is protected. Why? Because big money is there. Okay, and why? Because it has break structure. How do we know big money is there? It was able to do what, to break structure. Okay, so this is a protected low here, and it's a strong low. So our whole expectation is, once we start seeing price coming down, you know, this is our high and this is our low, right? Our whole expectation is the market is bullish. Why? Because this is strong and this is protected. It was able to break structure. We don't expect price to trade below. Okay, so we know that no matter what price we do here, price will go up. Why? Because it's still bearish. Yeah, this is still protected. We consider this protected. This is just the ideology, okay, that you need to have. And what I was trying to explain is, at times when people don't know the swing structure, they will turn out to go to, they will tend to see, since the market is a little bit more complex, they will tend to see things like this. For example, you see price start retracing, and for us, we know our swing structure, we know this where we're expecting price, right? And they tend to see market come like this, right? And let me just consider this as one, and they'll consider it making lower lows, lower highs. Yes, that's good. Lower lows, this is actually break of structure. I have not refused, right? But now these are actually internal structures, okay, and we're going to talk about that in the next lessons. And when price is retracing, the whole expectation, remember, you are seeing this now just because we have already drawn. So just imagine price is just retracing, and the expectation is, since this is a lower low, and this actually what, a strong high that was able to do what, to create a low. So expect price to do what, to maybe retrace. So they'll say, and they'll target what, the weak lows, which in this scenario they're actually right, but they are wrong, because you can see the swing trend is bullish. Sorry for my rough drawing. So you can see the swing trend is bullish, made of high highs, high lows, high highs, and we know these are protected high. So instead, once price is coming towards our protected low, the higher the probability for price to do what, to go up. Why? Because it's coming closer to the protected level. This is a level where we have big monies there. Why? Because it was able to break structure. Okay, so the more price pull, the higher the probability for it to go up. Okay, but in this scenario, you see a lot of traders, they'll try to sell, and that's where they'll be stopped out, and you see the market will go up. Did what? Came and did what? Another break of structure. Okay, let me just clear this right away. So you can see here, and you can see here, after that, what happened? You see price. So this is considered as what? You can consider all of this as just price came up, break structure, is strong now. So we expect this is what we are doing now. We don't expect price now to trade. Where below this protected and strong low. Why? Because the low was able to break structure here. And as soon as I see price retracing, this is my high, and I know price will do whatever I want, but price will not trade below here, and you see price come back, it breaks the structure again. Okay, and now this is your protected level, right? This is our protected low here that was able. Why is it called protected or strong? Why? It was able to break structure, indicating that there's smart money here and there's actually huge money here. So our expectation is, even price come down, it will not trade below this protected low. Price will come and it will continue up. Okay, and I've already shown you guys a bearish scenario. So this is a bearish scenario here. Let me just show you guys. Remember this, okay? Remember, strong lows are low that causes highs, which are actually higher lows. Strong lows are low that causes highs, which are actually higher lows. Here, remember, these are actually higher lows here, because this way was able to do what, to cause a high. It breaks structure. That is why it's considered a strong low. Why? Because it breaks structure, and it was able to cause a high. Once it breaks structure, it simply means it has created a new high. Okay, and these are strong highs that was able to do what, to create a low. After breaking structure, it has created a low already, so that's why it's called a strong high. Okay, and our goal is to catch the higher lows and lower highs. These are lower highs here, targeting lower lows, and higher lows here, targeting high highs. Okay, and it's just simply like trading from the strong side, targeting the weak, trading from the strong low or high, targeting the weak, or you can just say trading from the strong, targeting the weak, because in an uptrend the strong is the higher lows, because this is it, higher high, higher lows, higher high, higher lows, higher high, because here is it weak, strong, weak, strong, weak, strong. So you are trading from the strong, targeting the weak, the previous week, trading from the strong, targeting the previous week, trading from the strong, targeting the previous week. In a downtrend, trading from the strong, targeting the previous week, trading from the strong, targeting the previous week, trading from the strong, selling. That means you're selling here in a downtrend, targeting where the week. In an uptrend, you're buying here, targeting where the week, buying here, targeting what the previous week. Okay, buying here, targeting the previous week. I hope that is a little bit more clear. Okay, so this is now just like a reality part on how you can see it. So it's going to be a little bit complex, like I said, on real chart. And remember, our goal is to catch what? Higher lows and lower highs. Okay, so if you have watched to this far, I want you guys to make sure you give us a subscribe and like this video, okay, because we'll be coming more with more educative videos like this. Okay, so this is a great topic. It's a great topic. So now we have actually talked about the bullish market and the bearish market. I've shown you guys how in an uptrend the market is making what? Higher highs, higher lows, weak highs, strong lows, weak highs, strong lows, weak highs, strong lows, right? And I've shown you guys how in an uptrend the market is making what? Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. So now, and I'll show you guys in a downtrend, lower highs, lower lows, lower highs, lower highs, lower lows, and lower lows, lower highs, and so on. But now I've not shown you guys I've not explained to you guys how the market change from an uptrend to a downtrend. So since you'll be trading the foreign exchange market, unlike stock market and other markets, but in fact in all markets there will always be a change of trend, right, depending on the time frame. Why? Because the market will not just continue going up forever, neither will it continue going down forever. You'll see time where a bullish trend will change to a down to a bearish trend, and that's what we actually want to go into now. So first things first, quickly. So let's just look into price. So assuming price is price here, we have already gone through this. You see the market is making high highs, which is weak highs and strong lows. Remember, strong lows only after the break of structure. We'll confirm that, and our expectation is what? Price will not trade below there, and as soon as price started tracing, we know we are looking to do what? To buy from here, and we're targeting the highs. Okay, and now immediately that break of structure has happened, this is now a protected low, and we don't expect price to definitely do what? We don't expect price to definitely trade below this protected low. Our expectation is price will not trade below this protected low. Price will trade where? Price will continue up. Okay, and just as you can see, remember this was a protected low, and this was a protected low here, and this was a strong low. So we know these are uptrend, and we expect price to do whatever I want, but don't expect price to do what? To trade below it, and that's it. Price go and break structure. So now, since that price has break structure, you now know now this has moved up here. So this is now what? Our protected low, because it was able to break structure. This is our higher low, right? So let me just clear off the chart. So this is now our higher low. Okay, and now our price has gone up there. As soon as price started tracing, let's assume price has not, all this has not happened here, right? Because you're seeing this just because we draw them. Okay, and assuming in the live market you will not be able to see the future, assuming price not trace, our expectations is stand that price will do what? Price is going to continue. Okay, that is our expectation. But number as we move forward, we'll teach you guys how to manage your expectation. But keeping things simple, our expectation stands that price will go up. So we are looking forward to do what? To buy from here. But in this scenario, as you can see, as soon as the market is coming down, the market does what? The market breaks our higher low. It breaks structure. Okay, it's also considered as a break of structure. But in this case, it did not break the up structure. It did not break the up structure for the continuation to continue. It did what? It break the strong structure. And remember, this was a high that was able to do what? To create a low. So now this will be considered as a strong high. Why? Remember, a drop of a high is to make a low, and this high was able to make a low. Okay, from the previous lesson we just actually checked, and that means this is now considered what? As a strong high. So it's definitely what? Protected. Remember, and this is now considered as what? Break of structure, and not just a break of structure, but now a change of trend. So immediately price break here, we consider this a change of trend. This is a change transitioning, a trend transitioning, meaning an uptrend, which is made up of higher highs and higher lows, higher highs and higher lows, is changing now to a downtrend. Sorry for my rough drawing, it's crazy. It's changing now to a downtrend, which is made up of what? Lower lows, lower highs, lower lows, lower highs, lower lows. I hope that's clear. Okay, so in this case, it's still a break of structure, but now you consider as what? Change of trend. It's immediately a change of trend. It's immediately a change of trend. So this is just like what? A bullish trend changing to a bearish trend. Okay, so this is a good example of a bullish trend changing to a bearish or into a bearish trend. And now, some people in the market, right? Some people in the market will always have their own way, they do their own things, right? And remember, I told you there are multiple strategies on how to trade this market. So focus on one, and that's what we are doing. So some people always wait for double structure. For people always wait for the market to come back, and once it breaks structure first, right, before they can consider it's a change of trend. This is because at times what can happen is market can come down here, and the market can come down here, right, and this will be liquidity. My bad. And this will be liquidity. Don't bother. This liquidity, we are going to cover it as we move forward. And once this is liquidity, you may see price will continue going up. Okay, but now as we move forward, we are going to explain to you guys how to actually put yourself in the right condition and how to actually be able to select the trades. But this is what we work. This is how we actually look at the market here at the Prolific Traders Academy. Immediately price break there, we consider that as a change of trend. So the trend just change, like trend transitioning from a bullish trend to a bearish trend. Okay, and we made a low, and you see price come up. Remember, as price is coming up, this is now a protected high. Reason being that it was able to do what? It was able to break structure. Okay, and our expectation is price should not trade above this. And you see price break structure. Okay, and now our high is moved to there. Okay, so this is now what? Our protected high. We don't expect price to trade above this high. And as soon as price is trading, coming up, this is our range. My bad. So this is our range. So as you can see, price is coming up. This is our trading range. Our expectation is price cannot trade above here. That's our expectation. Price cannot trade above there. We know that price needs to come down, right? And we keep the expectation until it happens. Like you see here, our expectation was to see that price will go up, but until it happens, now we just understand the trend has changed. Okay, it has changed from what? From an uptrend to what? To a downtrend. Okay, so this is just an example of an uptrend changing into a downtrend. Okay, so this is now a good example of a downtrend changing to an uptrend. So it's just going to be the opposite. You see the market making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, and then make a lower low. My bad. Make a lower low, Then as soon as price trade above the lower low. So this is another key point you can definitely keep in mind. In a downtrend, as soon as a lower low, a lower high is violated, as soon as price break over a lower high, you know that the market has changed from what? From a downtrend to an uptrend. And in a bullish market, as soon as price trade below a higher low, you know that the market has changed from a bullish trend to a bearish trend. So remember, in a downtrend, as soon as price break above your lower high, your swing lower high, you know that the market has changed from what? A downtrend to an uptrend. And in an uptrend, as soon as price trade below your higher low, your swing higher low, know that the market has changed from what? An uptrend to a downtrend. As simple as it is. Okay. And remember, as soon as it happened, it has created what? This low has what? This low did what? This low was able to create a high. So remember, it's considered a strong low, because the rule of a low of a low is to create a high. Why? The job of a high is to create a low. Remember, the job of a high or a rule, the job of a high of a low is to create a high. The job of a high is to create a low. So when a high successfully create a low, is considered a strong high. When a high successfully create a low, is considered a strong high. And when the low is successfully create a high, which is actually a break of structure. Now, how do you consider this? Immediately after the break of structure, once the break of structure happens, we know the market has already printed what? A new high. Okay, so this is considered a strong low. Now, same here. Immediately this break of structure happened here, we know what? The market has already done, created a new low. So this is considered a strong high. Okay, and this is it. We know it is what is protected. Why? Because big money has stepped in there. Why? Because big money has stepped in there. So I expect the price will not trade below. The price will continue going up. And my bad for my crazy trying. And once price continue going up, you don't expect price to trade below. You consider this again. And that is that. You see, right? Break of structure again. Okay. And that is that. So that is that with basic market structure. That is that with basic market structure on how to do it. Identify. So these are a few things we have covered. I would like you guys, let's just do a quick summary again before we end the video, and make sure this summary is going to just guide you through everything we have actually gone through now. Okay, so remember, firstly we started with what? Basic market structure, the prolific traders. I've showed you guys the uptrend. We have the uptrend, bullish market. We have what? We have the downtrend, bearish market. Okay, also simply known as bearish market. Now, an uptrend is made of what? Higher highs and higher lows. Higher highs and higher lows. That's what make up what? An uptrend. A downtrend is made up of what? Lower lows, lower highs, lower lows, lower highs. That's what makes up what? Downtrend. Okay. Now remember, a higher low is confirmed only after a break of structure, and that is it. And a lower high is confirmed only after a break of structure. And we showed you guys these realities. And swing highs, highest point that causes the low. This is the highest point that causes a low. And swing low, lowest point that causes a high. Lowest point that causes a high. So remember, this is your swing low, this is your swing high. Okay, after a BOS, a break of structure, expect a pullback on that time frame. So remember, everything we are doing now is just based on one time frame. So immediately, our rule is immediately after a break of structure, what we're expecting is a pullback. We don't know when it's going to come, but we're expecting. So as soon as we start seeing it, we are not surprised. Okay, and we talked about the strong and weak highs and lows in the market structure. You know, this is another way for you to actually read market structure, which is very, very powerful. Okay, and we came with some few rules. Strong lows that causes highs. Okay, so this is a strong low that causes highs, and what you see there, higher lows. Okay, and strong highs, these are highs that causes lows. Remember, for a low to be considered a strong low, it has to make a high. Put it this way, for a low to be considered a strong low, it has to create a high, and for a high to be considered a strong high, it has to create a low. And how can a high create a low? It needs to break structure. So any low that breaks structure, you consider that as a strong low. Simple, right? Because on any high that breaks structure, you consider that as what? As a strong high. Because in this case, let me take a few examples. In this case, let's say this break structure here, and consider this as what? As a strong, right? And now this high here was able to do what? To break this structure. If this high was able to break this structure, now you consider this high as what? Instead now, consider high as our strong high. Why? Because it was able to do what? To make a low. Okay. So now this, I hope that is a little bit clear, because we have definitely covered that already. And that is it. Okay. But in this case, you see the lows are holding. Our expectation is the strong will hold and the weak, and will retreat from the strong and target the weak. Remember, our goal is to catch the higher lows and the lower highs, meaning our goal is to buy from here and target these lows. Buy from the strong and target the weaks. Buy from the strong and target the weaks. Buy from the strong and target the weaks. While in the downtrend is to, remember, sell from the strong and target the weaks. Okay, stay from the strong and target the weaks. Okay, and that is that. And then I showed you guys the change of trend, a bullish market changing to a downtrend. We talked about immediately after the confirmation. You know the trend has changed immediately after the break. Okay, now you consider the lower lows and lower highs, lower lows and lower highs, and this is just the opposite to this. Is just what? A downtrend changing to what? To an uptrend. Okay, so the next video is going to be on the three types of market structure. So for this, please, this is what we have already covered for now, and make sure you watch this multiple times so you can definitely get your head around it. And remember, this is just the beginning. If you find it confusing,